Good afternoon, traders. This is Chris Buss with Traders Profit Compass with your Market on Close report for Tuesday, October 6th. Wow, where to begin? We had a roller coaster day. I'm sure you heard that mid-afternoon, President Trump tweeted out that he has instructed his staff, Mitch McConnell and Steve Mnuchin, to pull back from COVID relief package negotiations because, in his words, the Democrats weren't negotiating in good faith. So that was the catalyst for the dramatic afternoon sell-off. So let's dive into the charts and see what we can find out. And really, you can look at this in two ways. One, the first way is that technically, nothing happened. And here's why. I've zoomed out to the daily chart. We've been in this trading range for several weeks. 341.50 down to 320. We had been looking for this breakout. Actually thought we had it today. And then the news broke and we fell back inside. So from a technical standpoint, we're still in the trading range. Nothing, no technical events have happened. Now, psychologically, maybe things have happened because now, at least for the foreseeable future, because the Senate doesn't come back in session till October 19th, that it's doubtful that a relief package is going to get passed before the election. Now, some people are talking it's just a art of the deal, negotiating ploy. I think we have to set all that stuff aside because, we're not politicians. But the market was anticipating something getting passed. And that was the reason for the rates rising. That was the reason for the underlying strength and bid in the market, figuring that $2 trillion was going to come in. And now that is apparently off the table, at least until it isn't. Something could break in a week or two to put that back on. But be that as it may, we're back in the trading range. And so now I think the important thing is, where do we go next? A couple things I'm looking at. The key level now, in the day or so ahead, is focusing back on the 50 EMA, which I have here in green. On all my charts, the 50 EMA is in green, and the 200 in gold. So that 50 EMA is at 331.68, so right here. I think you'd have to assume from a technical standpoint that if we lost the 50 EMA at 331.68, that we would come down towards the bottom of the box and either get close or tag it. On the flip side, nothing really gets me bullish at this point until we break out. We have been saying all along, price has to prove it. I admit today, I was actually thinking about a triple breakout, and we'll get into QQQ and IWM in a minute, but all three were emerging above their critical levels. And I was thinking to myself, they got it. Okay, they got it. Breaking above, and then of course that was all taken away. So it's hard to think of, what would be the bull catalyst now to reverse this and bring it back up. We have to be open to that, and certainly if we were to break above, and close above this 341.5, no way to spin it other than bullish. But I think now our bias should be to the downside, and that would be solidified on a break of the 50 EMA. So key off of that. I'm just going to zoom down. Oh, I wanted to show you one other thing on SPY, and that was the momentum profile. We had come down here. We had gotten a little lift. We've never gotten above the 0 line on momentum, and now we're starting to roll over. In my book, I've seen it a million times. When you get a rollover, and this is on any time frame, if you get a rollover just below the 0 line, it's a very bearish move. It's just like getting a curling up of the PPO at the 0 line is a very bullish move. That's what you want to see if you're a bull, this, you know, coming down and curling up at 0. But now we're on the other side of that, and we're curling over just below 0, and that's not a good look. That's not a good look if you're bullish. So let's go on to the 2-hour now. And this is just, you know, the big bar. We almost closed this gap from yesterday, didn't quite do it. I think we fell a few cents shy of filling that gap down to 334. And tomorrow, the key levels on this time frame would be recapturing 336 or losing 334. I think right here in the middle, you don't really have it. There's not really a trade to make. This really isn't, you know, a trading time frame per se. But if bulls can, you know, recapture this 336, it's, you know, short-term bullish. You may see some bear flagging action tomorrow on a little, you know, impulsive kind of rebound, form a little flag, and then come down. That would be my guess, but we'll just have to see. On the 30-minute time frame, we get a much clearer look at this. So here was the false breakout. We had gotten all the way up to 342, then it let go. And remember, we had actually talked about it this morning, that 338 was support, and that we didn't want to see that breach because then it's coming back into this trading range. So now we've broken below. We're down into this gap. I would assume this gap would fill tomorrow or in the days ahead to 334. And if that were to break, I think we're going to come down to 332 to test this this $3 gap down here. And then of course, if that were to break down, you know, now we're down towards the bottom half of the prior trading range, down to 329. But I would look for, you know, bounces at 334, 332, and 329 at those levels, and then we'll just have to see, you know, if it holds. But that's a big move in a short period of time, and like I said, I would be surprised if they just, you know, rally it back and, you know, recapture these levels. But if they do, if you're a short-term trader, that's bullish. So if you get a bounce and you get a recapture of 336, you know, you can be long. Just be ready, you know, ready to exit your position on any sign of trouble. But I think you have to favor the downside from here, at least short term, until price can prove that it can, you know, find support and get a bounce somewhere along the way. Same kind of look here on the QQQ daily. Got right up to the top of the trading range and was rejected. Again, this momentum profile is very troubling if you're a bull, because you would have wanted, you know, this to come up above zero and then head higher on the breakout, and that didn't happen. Now the 50 EMA here is at 272, and just like on SPY, I think that's the key level to hold if you're a bull. Otherwise, you're on the bottom half of this trading range, and you'd have to favor, you know, a move down to this 268 level, or even 260 down below at the bottom of the box. So that's kind of a bearish look there. Here on the 2 hour, you can see that we were pretty far above this the 280 level, up into the 281s. Then it let go, had filled this gap, so I will remove that tomorrow, and we're down at this 275 level, and you can see that we've got a gap at 274. So tomorrow 274 is the must-hold level on the Qs, or else it would be favored to go ahead and fill that gap down to 271.56. So that would be my my preferred kind of target here if 274 were to break. Going down to the 30-minute chart, you can see it even clearer. This was the gap from yesterday. Came back down to fill it. Now we've got a gap below at 274. That would be the line to hold, or else that's going to fill. And I think, where was 50? 50 is at 272. So that aligns pretty well technically to get this gap fill, and this is where the 50 EMA on the daily comes in at 272. So that would be kind of a line in the sand for holding the upper half of the range. You can see over here we had all this price action between 272 and 261. If we went back into this trading range, back below 272, back into this range, remember what we always say, you know, once you go out of the range, you don't want to go back in, because then the target becomes the bottom of the prior range. Now that doesn't mean it's going to happen in a straight line. There is support here at 268, but from a technical standpoint, the bulls kind of got to hold this 272 and the 50 to prevent price from coming down and opening up this lower half of the range from a week and a half ago, something like that. IWM was very strong. I was actually amazed. I think at the halftime report, I was saying, you know, I expect this thing to hesitate up here at 159 or 160. It was just cruising right through, and I was like, wow. I mean, this thing's going to go. That's when I was thinking triple breakout. And then, of course, the news hit and pushed it back below. Now, if you were on top of it, I know it was a fast move, but this 160 is still an objective level to short against. And if this whole thing has taken the wind out of the whole, you know, across the board, you know, pile into cyclicals. See, because the whole cyclical trade was in large part predicated on the stimulus. As I said before, you know, the banks, the rates were increasing. That was helping the banks. The back to normal, the stimulus was going to help the economy. Without that, I don't know if IWM can really hang on here at the top of the range, and I would think it's got to be coming back. I mean, at least some, maybe to 150. It doesn't have to come back all the way down here, but I think it's going to be hard to hold. So if you got any kind of a bounce up back towards 160, I think that's an attractive risk reward to be short. And you know what? If they pop 160, you're out with a paper cut. But if this thing keeps going down, I mean, your first stop's going to be 155. That's a level we've watched for a long time. And then if that doesn't hold, you're back at 150. So that's, you know, $8 worth of downside potentially on IWM. And again, really weak profile on momentum. Looking at the 2-hour chart, here was the breakout, the false breakout, and now coming down. You could even short against, look, this 157.50, where there was a lot of resistance before. I think you could short against that level and then look for a move down here towards 154.50 or 155. And then if it moved into this prior range, then you've really opened up some running room down towards 149 or 150. 30-minute chart essentially shows the same thing, except you do have another level here at 156. If you don't get a bounce and you know you break 156 to the downside and lose this uptrend line, then as we discussed, you're coming down here and you've got this big gap down to 153 that needs to get filled. And then, you know, from there, we'll just have to see. But I think there's probably some downside in IWM because I think a lot of this run was on stimulus hopes. Facebook. There was some news after hours. I guess the Justice Department released its report or findings or thoughts or whatever that, what was it, Facebook, Apple, Amazon, and Google have monopoly powers. What that means for the future, I have no idea. You know, that regulatory risk has been out there for a while. But just from a technical standpoint, and large cap tech was soggy all day. So I don't know if, you know, there was like an inkling on the street that this thing was coming, but got rejected at 264. We talked about that at noon. And then it lost this 260 level. So until 260 is recaptured, your target is 255, and I think it's going to find that level. Whether it breaks 255 or not, I'm not, you know, sure. We'll just have to see how price reacts when it gets down there. But if things fall apart and you lose 255, then you're back at 250 again, and that brings in this giant gap that we've been watching and having our eye on for quite a while. So tomorrow, I think you can be short against 260 and, you know, have your stop a little bit above and look for 255. But I also want to say, you know, if it's down in the pre-market, down in here, you know, 257s or whatever, just just wait at that point. Wait for it to either get to 255 or bounce back to 260. Try to stay away from taking trades in between levels because you got no line there to shoot against. It's too far away. Wait till you're up against resistance or down at support before you take those trades. Apple actually held up pretty well. It had made another run to get above 215. It was rejected, lost this 114 level, and then closed a little bit below. In my eyes, and you can see it on a 30-minute chart or a 5-minute chart, 113 is really the line it needs to hold. Below 113, that opens up 110. So I ought to move that line, and I'll do that afterwards. It's really 113 is your line here in the sand for Apple to hold, to keep, you know, the bullish case somewhat intact. But below that, I would expect 110. Amazon was a setup or a trade that I was talking about in the trading room, that these $50 levels have just worked like magic. When this got rejected at 3,200, boom, it came right down to 3,150. We talked about at lunchtime that was a line to hold. It got above, but then lost it and came right back down, $50 lower to 3,100, and filled this gap. So tomorrow, 3,100 is your pivot. Anything above, if there's going to be a bounce, that's fine. But if it loses 3,100, it's coming down to 3,050 right away. And then if it loses 3,050, then, you know, down here to 3,029.75. So that might set up, depending on what it does in the pre-market, it's right at a critical level. You might be able to get a really nice entry there if it doesn't do too much in the pre-market, where you could get a good entry there on a break below, and then just stay short against 3,100 if you're comfortable, you know, trading Amazon. Microsoft was waging this battle at 208 and finally lost it. Came down, filled the gap from yesterday, came down and tagged this 204.50. That to me is your line tomorrow, 204.50. Below that, you're looking at 202 and possibly lower if it can't hold that level. But to my eye, this line right here at 204.50 is your pivot. I don't think there's much to do, you know, right in this area. I don't think there's a lot to shoot against. I think, you know, 208 was your level. If you got short yesterday, stay short. You know, you can roll down your strikes or your stops, whatever you want to do there, but you're fine. And look for a move down to recheck this low from today at 204.50. Netflix is another one that's going to set up well tomorrow for active traders. We had pointed out this morning that it got rejected at 520, had come down at around noon, put in a little bear flag, and then the news hit and it came down to 505, which is that key level that the bulls have been able to hold since the other day. So tomorrow, 505 is your pivot. Anything above is okay to be long, but anything below is going to open up a $10 move down to $4.95, and if things get ugly, down to $4.85. So tomorrow, again, depending on what it does in the pre-market, where it opens, if you can get something close to 505, I think that's going to be a really nice level to shoot against, either on, you know, a bounce trade, or if it fails, losing that pivot point and coming down to 495 and possibly lower. Google, we have been focusing in on this 1465. It obviously lost it. I don't see a lot here to prevent it from falling further. You know, it's kind of out in space with not a lot of, you know, technical support in here. If you were to draw a line right here at 1450, where this prior low was, I think you could use that as a pivot with a tight stop if you wanted to, you know, try a short if it fell below 1450. And the reason I say that is because it's basically got $40 to fall. So it sets up with a nice risk reward if you were to give yourself, say, a $5 stop, you know, up to 1455 or even 1460. If you gave it a $10 stop, you still got $40 of downside. So that's 4-to-1 risk reward. And certainly if you got a kickback up towards 1460, just below this 1465, all the better, because I think lower is in the cards for Google. Tesla actually held up pretty well. It had gotten rejected at 430, kind of wrestled with this, came down to tag this 1410 to fill this gap, and bounced into the close. I think tomorrow 1410 is your pivot. If, you know, it comes down there and holds, you might have a nice long. If it breaks, then you're coming back into the, you know, 390s, possibly lower on a break of 410. So I think that's your pivot level tomorrow for active traders. Gold, now I wish I had that short against 180 that we've been talking about. What happened here is when the news broke that there wasn't going to be a stimulus, what happened was the dollar shot up. The dollar was hovering flat most of the day, and then when that news broke, it shot up, and that killed the metals. So there's the potential for further dollar strength now that that stimulus is off the table. And now with that rejection at 180, I think the path is lower. So that ended up working well. And it's really amazing how when you do these charts enough times and you look at this stuff, how things happen, news, whatever happens at critical levels where things just happen. I mean, the news aligns with the charts. It's uncanny, because right here is, wow, is it going to break out or not? And boom, get that impulsive breakdown against resistance. Same thing with silver. It had reached up in the morning, and then dollar strength whacked it down here. I think that's going to come back to 2050, as we had been discussing and thinking about. NEO, this is one of our longs. Took a whack, but it held up. It held this right at the 21 level. I'm willing to stick with it, so I'm actually hoping that Tesla does well tomorrow because they tend to kind of trade together. As long as it holds this level right here, I'm going to stick with it, but if it falls down below, I'm just going to take it off. TLT, this was the moonshot right here when the news broke of, TLT falling was interest rates rising. Then when the news broke, interest rates dropped quickly, which made TLT do a moonshot. So there was actually one guy in the trading room had talked to me about the prospects for TLT, and I said, this 158.25 is a key level, and support is support until it's broken. And he actually took a long there, so he got the moonshot, which turned out to be a great trade. Now tomorrow, right at this 161.50, if price were to break above, then you've got an objective long against 161 for a move higher in TLT on the recapture of this level. So if you don't have to be a bond trader. This is just trading. You've got an objective level there, and when you recapture a level from below, it's bullish. And you can see that there would be room to run if rates decide to fall further. This FSLY, we had bought the breakout above 100. It actually held up well. It had come down. It took the hit, but then was recovering towards the close. And I'm going to give it, another, however long. If it takes out my stop here at 99, I'll close it. But I still have a little faith that this can hold the breakout and move higher, because earnings are in 3 weeks, and heading into earnings season with some of these names, it can kind of defy the odds and move higher. But if not, take the loss and move on. But I was encouraged that the thing didn't just fall apart when the news broke. It took a hit, but then it started recovering, so we'll see how it goes. Airlines took a big hit. This is the airline index. This is not tradable. It's just a composite of all the different airlines. You can see it's working into this triangle. I would be watching the airlines carefully, because they're not going to get a private bailout. It's going to be either part of a package or they're not going to get it. And I saw a thing today where in the next 12 months, airlines are set to lose $130 billion. There's going to come a point where even the politicians are going to say, we're dumping money into a hole, and it's not going to help. So if we see the airline index break down below this 138 level, they may have farther to fall. So we'll have to keep an eye on that. Banks were another one that had been running on higher rates. and this KRE, the regional bank index, reached up, almost got to the 200, and then reversed. So I'm not saying there's a great trade to make right here, but all the banks are going to be reporting over the next few weeks, the big banks, and then, you know, all the regionals as well. And we may see this come back down towards 34 in the weeks ahead, you know, if interest rates continue to fall, and it looks like there's not going to be a stimulus package till after the election, which is, you know, the election's 4 weeks away, and they're not going to be able to do a stimulus, you know, the day after the election. So it may be well into December or even first quarter of next year before they get any of that done. So also, as a reminder, the IWM is loaded with regional banks and other financials. So if, you know, if these go down, it's going to weigh on the small cap index. So a lot going on today. It's just another reminder to keep an open mind about everything. You never know when something's going to happen, and to have your levels in focus, because it doesn't matter why a stock or an index goes up or down. It's just the fact that it does. You know, if price breaks out, it's bullish. If price breaks down, it's bearish. And I know it can be or seem more complicated than that, but it's really not. If price loses a level, it's got to recapture that level in order to be bullish. So as we're going forward, let's maintain our composure. Let's focus in on the levels and let price lead the way. You know, be a leaf on a stream. The leaf doesn't care if it's going left or right, up or down. It just floats on that river of price. And that's what I want to do in our trading, is let price lead the way. And if it's going down and losing levels, let's be bearish and take advantage of it, both in our short-term trades and potentially our swing trades. And if it recovers, we'll go bullish. It's as simple as that. But I will say, now that we're back in the range, we're back in the chop. So it's not going to be a straight line in either direction. We're back in that, you know, we're up 1% today and down 1% tomorrow. It can be a frustrating environment. So trade a little smaller. That way you won't be, you know, panicky when you see those moves, because you won't have as much, you know, out there on the line, whips on your P&L, which will make you nervous. So anyways, that's all I've got for tonight. We'll see what happens in the morning and pick it up then. I hope you managed today well and kept your wits about yourself and stayed composed in the midst of that sharp sell-off. If you're new to the channel, please hit the subscribe button and the alarm bell to get fresh content all the time. Hit the like button if you like the content, and then jump over to the show notes. You'll see places to subscribe to my content. You'll get all the information in your inbox each and every day and intraday when things are happening. And check out the blog. There's a lot of good information there that'll help aspiring traders at all levels. This has been Chris Buss with Traders Profit Compass. Have a good evening, and talk to you next time. Good night.